I think that you also are at a moment where we are hoping to get more regulatory clarity, not to be ironic.
Yes.
And I think, we're in a little bit of a crypto winter. So we're using that at Franklin Templeton as a real opportunity to bring more talent onto the platform and to really think about what does this next wave of growth, what is that going to look like? Where is that going to come from?
Yep.
And I think that we're very, very optimistic about where we see this next wave, right? I think that we got up to about 4 trillion in this last bull market. I think we're going to see multiples of that move into crypto. We could get 20, 30, maybe even north of that in terms of total money moving into the ecosystem.
Where does the confidence in that come from? Is it more just kind of early inklings of what you're seeing on the tokenization front? Because I know at Franklin, you guys were early in terms of putting things on chain and actually having distributions paid on chain. Is it more that or more what you were just kind of talking about in your new post around
40 banks? They just ran a 4-hour live test of blockchain-based trading. Tell us a little bit about that. Tell us a little bit about how Stellar fits into that.
Yeah, I think the tokenization piece and what's happening with, tokenization of real world assets, of bank deposits, of even insurance, you think about everything as being tokenized today. And I think for the most part, people are realizing that blockchain actually really helps to make that happen. Having the banks involved, this is the thing that's interesting about if you combine it with Clarity. Everybody's already doing this. Like Clarity's not going to make this so that it opens up the floodgates. The floodgates have already opened. Everybody wants to do it. We have an SEC and a CFTC that are engaged in helping us to move forward with all of these things. The reason why we need Clarity is because we need Clarity in case there's a flip and the Democrats take the White House later. That's what Clarity would do for us. But right now we have.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. I want to touch on something that both Danielle Dixon and individual representative from Franklin Templeton here, Sandy Call, said in their recent podcasts, and then touch on something that I'm seeing in terms of a schematic that I've been paying attention to, that we've been paying attention to here at CYPRX for some time now. Considering that today the total market cap of crypto added over $104 billion in one day, I have a firm belief that what these individuals are saying, Danielle Dixon saying the floodgates have already opened regardless if Clarity passes or not, and Sandy Call's Franklin Templeton, or Franklin Templeton Sandy Call, said she's predicting anywhere between 20, 30, $40 trillion in market cap. And something I want to bring to everybody's attention is that this, in my personal opinion, this bear market that we just witnessed is the last time that we're going to see the total crypto market cap in crypto sub $2.3 trillion. Now, I'm not saying that the bottom is in. Could we see lower prices from here? Of course, anything is possible. But do I believe that we are close to a bottoming out in the crypto ecosystem? Absolutely. And I want to explain my case why, just based off of some sound technical analysis principles, and show you all that if Sandy Call's prediction is correct, and we go, and I'm going to lowball her, her prediction is 20, 30, $40 trillion. I'm going to put it at $10 trillion. So that's 30 trillion less than her highest prediction, which is 40 trillion. And show you guys that if we reach $10 trillion, we are never coming back to $2 trillion again. So let's break this down first. Why do I think that, and just in terms of technical analysis, the bottom of the crypto market is at or around where we're currently trading at today? Now, if we do go lower on my radar, I will let this be known. I do have 1.84 trillion and $1.71 trillion, which is the low of the yen carry trade unwind that happened in 2024 before the market bottomed out in August and turned around and we flipped bullish as bearish targets as to where, if we do see another massive risk-off event, we could see the market liquidate some over-leveraged positions down here from 2024. But even if we go below $2 trillion again, I still think that we are at or near a bottoming out in crypto. So let me explain why. Let's just first go back and look at the market cycle from 2020 to 2022, rolling into 2023, when the market finally bottomed out from the 2021 bear market. We're going to come over here to the left-hand side of TradingView, and I'm going to show you all this bars pattern tool. And we're going to copy the price action from 2020 to 2022, when the market bottomed out in December 2022. So that way you all can see that all I did was just copy this price action. Here it is right here. And we're going to take it, this price action from 2020 to 2022, and we're going to come over to the current market schematic that we are actively living through. And we can see that it is a mere representative of the price action from 2020 to 2022. Not only is it mirrored in terms of price action, but it is also mirrored in terms of size. So just again, you all can see this. This is the same price action here. It mirrors the current price action in this current bear market cycle. So we have an up move before a slight pullback, one last finale to take out over leveraged sell positions that got caught early. Then we see selling happen. We see a slight pullback giving some optimism before the final crash. And during the final crash here in this area, we also see the moving averages converge and cross over to the downside. Now, if I take this same exact schematic again and I copy it and I take it over to current price action, I get rid of the ghost tool where we can see that same exact PA. And we can see the same exact capitulation event and the moving averages on the weekly converged to the downside and started acting as a resistance in the same exact area that it did over here back in 2022. So now where are we at in this schematic? Well, we are in this consolidation phase where the market for about a year and a half consolidated before finally breaking out and flipping back bullish, adding over $2 trillion, $2.5 trillion to the market cap of crypto. Now, if we look at where we're currently at, and again, we take the same schematic from 2020 to 2022, and we bring it over here, it is my firm belief that we are currently in this phase of the market cycle. We're in this phase of the market cycle where, like I said, even if we do go lower, we're in this consolidated phase, this accumulation phase before a breakout. And so in between 2.2 and $1.7 trillion is where I think the market's going to start to bottom out. And we are going to start to finally see whether we go lower one last time or we break out from where we're currently trading at. And we start to see the numbers that Sandy Call is talking about, the floodgates open that Danielle Dixon is talking about. And so now let me blow your mind even further. Why I think that you are never going to be able to buy certain digital assets sub $2 trillion market cap ever again. And now it's not going to be all layer ones, layer zeros, and layer twos, because there are going to be some winners and losers. But let's just look at what would happen if the market hit $10 trillion. So looking at the last two bear market cycles and measuring from the high of the bear market, so 2021, down to the low of the bear market in December 2022, the market lost $2.3 trillion. Something else that I find similar is that the market cap in this most recent bearish pullback, as I showed you all the schematic in terms of technical analysis, is exactly the same. Like, it is literally exactly the same schematic. Again, I'll show you all. If you take the tool here, bars pattern, you copy the price action from 2020 to 2022, and you take it over to the current price action, it is the same exact schematic. Now, what else is the same is the high of 2021 to the low of 2022 was $2.3 trillion. Well, if we look at the high in October 2025 down to the current low, it is also $2.3 trillion, where the market started to consolidate, bottom out, and eventually flip bullish. Now, let's assume that my prediction is correct and that we are at a bottom or close to one. And we do finally flip bullish, and Sandy Call's prediction on the low end comes into fruition. And we climb over a period of time, because it is not going to happen overnight. It will take months to get there. But we climb to $10 trillion. Why do I think that we are never going to get the opportunity to buy sub $2.3 trillion ever again in history? Is because of this. If you even take, so let's say we get to $10 trillion, and you take from a pullback at $10 trillion, the last two bear market pullbacks combined, which have been the most two painful bearish markets in crypto's history. So you take subtraction of $2.3 trillion if we reach 10 trillion and we enter into a bear market from there. And you also take the amount of money that we lost in this most recent bearish market pullback, and we pull back another $2 trillion. That would still only put us with a $5 trillion pullback at $5 trillion freaking dollars, y'all. There is no way in hell that if we go to $10 trillion, we are going to pull back $10 trillion and come all the way back down to $2 trillion market cap, which is why I'm saying that this most recent bottom in crypto is going to be one of the last opportunities to get into the digital asset ecosystem whenever this market does bottom out sub $2 trillion. Now, again, I want all my followers to understand that I'm not calling for the bottom. I'm not saying that the bottom is in. And does risk remain in the digital asset ecosystem? 110%. It still does. But they did this to stocks back in the day, where if we look at crypto's price action, we had a massive bull run. Price came all the way back down to discounts where they were buying from previous discounted area, and then they ran higher. We can see the same thing happening. All the people that got lucky, all the over-leveraged retail traders that bought the bottom of this Japanese yen carry trade unwind that happened end of July, beginning of August 2024, got lucky, and they were able to buy leverage positions, and now they're coming to clear all of that leverage out. For the most part, that leverage has been cleared, all except the lows from July, August 2024, which have yet to happen. And if they don't, so be it. We go up from here. If they do, we slightly go a bit lower. But nonetheless, this is healthy for markets to do. Don't believe me? Let's go over and take a look at a stock like Amazon, which proves my point indefinitely, in my personal opinion, that this is for a fact what is about to happen to crypto. So we take a look at Amazon's price action, and we go all the way back to the early days of Amazon. Looking at this price action here, we can imagine the same thing for crypto. We went on a massive bullish run. They came back, they cleared out all the over leveraged positions and put price practically back at where it had started. Having everybody that bought at these highs think that the end was it. It was over. Amazon's going away. Never going to exist anymore. It's probably going to drop to zero. You can imagine all the pain, all the fear, all the uncertainty, all the doubt that happened. Of course, this is the 2000, 2001 era. So there was all that trouble happening with Iran, Iraq, right? Afghanistan at the time. Okay. Keep in mind what's happening right now. War with Iran, cycles repeat themselves. Think about it, guys and gals. Sure enough, after that unfolded and finally solved itself, we went on a nice little relief run. Here in this area, we can assume, just like in crypto, with the recent rally that we saw. So let's pretend that in crypto, this was 2020 to 2022. Then this rally was 2023 to 2025, pullback in 2026. However, again, this is Amazon stock. And look at what happened. We corrected the entire bullish move, just like we did in crypto. And just like in crypto, everybody thought, or everybody thinks now to this day, that prices are going to zero. And then look at what happened. Just like I'm predicting, right? Sandy Call's prediction of 10, 20, $30 trillion market cap. You can go outright and say that Amazon stock is never, ever going to trade at $1.94 to $1.85 ever again. Even if the stock market corrected 90% today, you will not see Amazon stock trade sub $20 ever again in history. And this is what is about to happen to crypto. Believe it or not, and as crazy as this video sounds right now, guarantee you looking back, I don't have a time frame on it, but I'm going to go outright and say by 2030, at the latest 2035, this will materialize and fully start to come into fruition. Now, again, speculative video, but reasonable speculation nonetheless, based off of current schematics in crypto, based off of mirroring schematics from the 2020 to 2022 cycle that we are currently seeing now. So what will I start to see as an indicator, aside from our dart pool software that we have in the CYPRX community, that will give me clear indication that the bottom is officially in? Well, the last thing that I did not show you all that mirrors this price action from 2020 to 2022 is this weekly 50 moving average. And so here you can see, once we finally had our nasty last little sell-off, which again, you can kind of see the same schematic here. So let me draw this on for you. We had this last little blip here, this sell-off. Price then pulled back into the 18 moving average, and everybody probably got a little bit euphoric. And then we had one last sell-off down into the lows. So if we look and we take the same schematic, we can see that it's happening right now. We had this one last little sell-off, and after price pushed into the 18 moving average, and then price took the lows, and now we're starting to see a formal recovery. So if this schematic is going to mirror itself, what we now need to see, just like we saw here, so taking this back to this era of time, what we now need to see is this bullish move break back above the 50 moving average, which coexists with the $2.6 trillion dark pool. And if we can see, just like how we saw back in 2022, rolling into 2023, some healthy consolidation at higher highs and higher lows being made, turning the 50 moving average on the weekly into support, that is going to be a clear indication for me that the bottom is officially in. Is if we break back above the 50 moving average on the weekly, turn $2.6 to $2.3 trillion into support, start a healthy consolidation phase or a breakout phase above the moving averages, where we can see clear as day every single time the moving averages converge. So for example, here, just like in the schematic, 2020 to 2022, the moving averages acted as a resistance. When they were finally broken and they started acting as a support, you can see that the tides changed. So for now, in the total crypto market cap, we still have a ways to go, as you all can physically see this. We still have about $300 billion in market cap that we need to get back, and then turn that rise in market cap into support to see the moving averages converge underneath of price on the weekly, just like they did back in 2023 to 2024. And if we can see this here, then it is my firm belief that from that area of interest, we will see a rally start to unfold. A rally like none other. A rally that has been or will be the biggest rally in digital asset history all the way back since the inception of crypto. Because what we've never seen in crypto before, even in the 2017 rally, in the 2020 to 2021 rally, in the 2022 to 2025 rally, none of these rallies have we ever seen real utility at scale. Have we ever seen institutional FOMO and clear regulations for institutions to allocate 3 to 5% of their portfolio into digital assets? Never have we seen FOMO from wealth managers, asset managers, hedge funds, none of that. All of that is about to come. And so it is my firm belief that what I'm showing you all in today's video breakdown, albeit it is a form of speculation, is healthy speculation to assume that if we ever do, I should say when we do reach $10 trillion on the low end of Sandy Call's prediction of anywhere between $20 to $40 trillion this next market cycle, we are never going to get the opportunity again to buy certain digital assets. Again, I don't know or have a crystal ball on which ones those are going to be. It's everybody's healthy speculation in your own personal portfolio as to which ones those are going to be. But we are not going to get the chance to buy sub $2.3 trillion ever again. Just like if you go over to Amazon stock and you look at the trajectory, you will never be able to buy Amazon stock at $1.85 ever again. With that being said, many blessings to you guys. Be cognizant, be aware out there. Prepare yourselves for what is to come. Again, I'm not saying that the bottom is in. Personally, I favor markets going lower because that'll just give me an opportunity to dollar cost average into some better long-term positions. But nonetheless, I have been taking advantage of this most recent market downturn based off of everything that I've shown you all in today's video breakdown. If you enjoyed, do us that favor, smash that thumbs up button, subscribe. Remember, none of this is financial advice. I'm not telling you guys to go out there and freaking 100x long the markets with leverage because I think that the bottom is close to being in. Not at all. There's still risk in the market, and we could see massive downside if I'm wrong, where prices could come all the way back down into 2022, 2023 lows. As crazy as that sounds, we cannot rule anything out as a possibility at this current moment in time. So do with that information what you will. Of course, assess your own personal risk properly, but we are in for a wild ride in the next consecutive couple of years ahead. As always, be cognizant, be aware out there, and I will see you all in the next video breakdown.